All right, hello, this is Mike again with the NetPicks Options Academy. This is the weekend recap for Saturday, November 21st. So after a really active couple of months in the markets, and we've seen a lot of nice swings back and forth. This past week, towards the tail end of this past week, we finally started to see the market show some signs of getting tired. Okay, if you take a look at this daily chart of the SPY, you can see some really nice size candles going back over the past number of weeks, where we've seen a lot of nice swings, a lot of nice trends developing. Look at the last two daily candles from last week. Okay, look at how, we've got some dojis starting to show up, some indecisive price action, and that's very common after, you're coming off of some big market moves. So what we can take from this over the next couple of weeks, especially as we head into the holidays, you want to be cautious here. I don't think this is the time to jump in with both feet, in either direction. So we've had a lot of really nice winning trades over the past couple weeks. Just this past week, we've started to see trades that it's been tricky to get follow through to targets, where we've had a lot of first targets hit. We've been moving trailing stops up, and we've been getting taken out with some partial profits. Okay, so when I start to see this type of price action, I do a couple things in my own trading. Number one, I start to pull back on position size if I haven't done so already. I start to trade more vertical spreads. I start to sell premium whenever possible. If the volatility is elevated enough on a specific product, I'll look to go in to sell some call spreads or put on some iron condors, and we found some really nice success with that over the past number of months. Okay, so with the current markets heading into next week, with the holiday week, markets are closed on Thursday. It's a half day on Friday. I even anticipate Wednesday being a slower session. So I would expect Monday and Tuesday of this upcoming week to pretty decent. I would expect them to be somewhat normal. The rest of the week, forget about it. I mean, it's going to be very difficult to trade. The volumes are going to be very, very light. Okay, when volumes get that light, the markets can get whipped around pretty easily. So you want to be cautious of that. If you're flat, if you don't have any positions on right now, if you're just getting started in the markets, or you don't quite know how to handle a holiday week, take it off. I mean, it's not gonna mean that big of a difference long term. I don't see next week being super active. If you are active, if you've got positions on already, if you're like me, where heading into next week, I've got a number of positions on. What I will do, I'll manage them accordingly. I'll wait for targets or stops to be hit. Okay, but on any new trades that develop next week, I'm going to be very cautious. I'm going to cut back. Okay, less is more, in my opinion, next week. So on the upside, what are some levels that I'm looking at? Well, just from the past couple of weeks, we've got this high right up around just under the 112 or the 212 level. That would be my next area of resistance that I'd be looking at. We then have the highs of the year at 213.75. Now here's my concern there on the upside. Everybody is now expecting the markets to head up and close near the highs at the end of the year. I mean, I can't find many people out there that see any fear in the market. It's almost as if it's a guarantee that we're going to head up to the highs. Well, if you've been involved in the markets for any length of time, you know that there are no guarantees. In fact, the market likes to hurt as many people as possible. So it wouldn't surprise me at all if we head into December and we get a sharp sell-off. I would not be surprised at all whatsoever. There's just way too much bullishness right now. Okay, so if we do get some selling pressure to kick in, where am I looking at for support? We've got the whole cluster of moving averages that we look at down below us. I'm talking between 208.25 all the way down to 202. There's support levels the whole way down. So if we do get some selling pressure to kick in, I mean, the bears, they have their work cut out for them. It's going to take some work to get some follow through on the downside. So what I'm going to be watching for that, I want to see volume. I mentioned next week's a little iffy on the volume side, but once we get that holiday out of the way, we're going to have that little window of time between Thanksgiving and Christmas where we could get some decent activity. And if we get volume to pick back up, if we can get the VIX to pop back up, okay, some fear to come back into this market, we've got a lot of people that are sitting on nice gains to the upside over the past couple of months. We could definitely get some profit taking heading into the end of the year, in my opinion. Okay, a lot of my indicators are showing overbought levels again, so you just want to be cautious. If you're sitting in long trades, I'm not telling you to jump out. I'm just saying be cautious. Lock in profit along the way. Use smart money management along the way. Be smart. Okay, so SPY and DIA. DIA is the Dow ETF that we track. They have been moving very similar to each other of late. So this is going to be a very similar chart over on the Dow. We've got that resistance level up just under the 180 level from a couple weeks ago. The highs of the year are all the way up at 183. So we'll see if we can get back up there. Again, you guys know what I just said here on SPY. We're seeing signs of some tired markets here. So I think we're going to have to get another wave to the downside before we head back up to those highs, in my opinion. So we'll see. On the downside, we've got support levels from the 177 area all the way down to 171. So again, a lot of support below us, but if volume picks up, we could see some of those levels broken pretty quickly. Finally, on QQQ, the NASDAQ has been super strong. I mean, a lot of the names inside of the NASDAQ have been leaders. I mean, I'm thinking Amazon, Netflix, Apple, Google. I mean, they've all been very strong here of late. So the NASDAQ heading right back up towards those highs. I mean, the all-time highs are 115.47. I mean, that's a stone's throw away. I mean, we could hit that very quickly even next week. So the NASDAQ has been the leader. With that being said, we've also got a lot of those leaders at overbought levels. So if we start to lose that leadership from Google, Netflix, Apple, Amazon, we could get a wave of profit taking. And you can see the support levels on this chart from anywhere in the 113.25 level all the way down to 107. We've got support levels all the way down there. My concern with this market is, over the past week or so, when we start to talk about the internals, we talk about those in our training room every day. Let me pull them up here. When I say the market internals, we like to look at, whether there's broad-based buying or selling. We like to take a look at the volume. We like to take a look at the NYSE tick just to kind of see, are there any strong buy programs or sell programs. What we've seen over the past week or so, even though the market was very strong on Friday, look at the NYSE up volume versus down volume. We're only at 1.03 to 1 positive. On a strong trendy day to the upside, I'd like to see that to 2 to 1 positive at a minimum. That means that there's more volume going into the up names versus the down names. Okay, on the advanced decline line, we only closed at 561 here Friday. On a strong trending day, at a minimum, I'd like to get that up above 1,000. That means that there's broad-based buying. This is kind of the trend that we've seen here. On the buying, it really has not been broad-based, strong across-the-board buying. We've seen a lot of buying within a small cluster of names, those leaders that I talked about, those big tech names. They've been leading the charge. We've seen a lot of days here lately where there's actually more names making new lows than making new highs. Okay, that's concerning. Look at Friday's session. Let me close out that, or let me move that data box over and zoom out here just a little bit on the NYSE tick. Let me get 2 days in there. See if that'll allow us to look at it. Okay, here's the NYSE tick. Okay, we didn't have one single extreme. We didn't have one single plus 1,000 or minus 1,000 reading on the tick, meaning that there was not one time on Friday when we saw strong across the board buying or strong across the board selling. It's a very mixed market. So if all you did was came in to look at the final numbers on the day, you're going to see that the Dow closed up 91 points. The S&P closed up 8 points. The NASDAQ closed up 31 points. If all you did was look at those numbers, you're saying, hey, we're in a strong bullish market, a very strong day on Friday. It was actually a different story on Friday. Sure, we ended up closing higher, but there's some very clear warning signals that the market's getting tired. We're not getting that broad-based strong selling across the board. So just some food for thought as we head into next week. It wouldn't surprise me at all if we do get some movement to the downside. We're due for some healthy profit taking here. The VIX has gotten hit pretty hard again here. We're back down into the 15 range. We were down $1.50 on the VIX on Friday. That just goes to show when you start to get in towards those lower teens into the even into the 11, 12 range, that just shows that there's no fear in the market. That means options are very cheap, just makes it more tricky to trade. There's not as many things that we can do. So I would love to see that VIX back up into the upper teens, lower 20s over the next couple weeks. That would really open up our playbook a bit. Okay, so with all that being said, what are some of our current positions? Well, let's go through a number of these charts pretty quickly. Here's SPY. We've got this long trade that triggered in last week. Okay, not thrilled with it. Okay, I'm in it with a smaller position size. I'm in it with a call spread. So things that I talked about right at the top of the video, I mentioned I'm going to be more cautious with these trades on the long side. We've got the holiday session coming up, or the holiday week coming up. I want to be a little more cautious, so I'm trading very, very small positions. We've got targets in place, 210.34, 212.31. The stop on this trade is down at 204.83. So everything's in place for me. It's just a matter of me coming in and managing this trade here next week. So we have a small profit on it. Even if we hit full target, it's going to be a smaller winner for me. But I have no problem cutting back, especially given all the gains that we've had the past couple of months. I mean, it's been phenomenal. So I don't want to give back and get greedy, give back those gains, trying to be aggressive heading into a holiday week. QQQ, very similar. We had this long trade that triggered in late in the week. We have targets in place, 115.64, 116.86. We had the stop at 111.49. So again, long call spread out in the December monthly options. This is not a time heading into a holiday week. In my opinion, not a time to mess with weekly options. Go farther out in time. Don't have that time decay kill you if we get stuck in some slow markets next week. So December monthly options is where I am at, and I'm in a lot of vertical spreads right now. We talked about some of the big market leaders. Let's go into Amazon here. Let's zoom in there. So here's an example of what I was talking about. Some of these market leaders, we had Amazon in this long trade from middle of the week. We made some really nice progress up to the first target. That allowed us to move the stop to break even, and that's where we got wiggled out on Friday. Okay, we kind of saw a market that was drifting lower all day. We gapped up Friday morning. The first half hour was strong. We spent the rest of the day on many names kind of drifting back lower, and that's what we saw on Amazon. So it took us out at break even, no harm done. We now heading into next week. We have a new long setting up at 673.13. To be honest, I'm not all that thrilled with chasing this move higher. If we take a longer view of Amazon, let's try to zoom out. I mean, look how overdone we are on the upside. It's been a huge move to the upside, so I definitely would like to see Amazon pull back before we chase any more moves to the upside. So heading into next week, we are flat. If you didn't want to take any new trades next week, I'm perfectly fine with that. If you just wanted to say, you know what, I'm going to take the week off, come back in the following week, that's perfectly acceptable in my book. Google. You can see the long trade. We are still long from last week. So again, I'm in a small position. We've made some nice progress to the upside. We have a target in place. Let me zoom in so you can see that. Full target's at 781.11. Our stop is now at break even at 759.65. If we get any type of a higher open on Monday, if we can start to approach that 780 level, I will start to lock in profit here. Book some profit. Don't give it all up on a pullback. I'm in a call spread, a small position size out in December monthly options. So far so good. It's a small profit, but we'll see if we can sneak out one more full winner there on Google. Netflix. Again, I'm just trying to hit all these big market leaders, the big tech names that we trade. Very similar to Amazon. We had a really great full winner earlier in the week. We talked about that in the midweek recap on Wednesday, in Wednesday's video. We now have this long trade that got taken out at break even on Thursday. So last week we actually had two trades on Netflix. We had a full winner and a break even. So it was a nice week on Netflix. We now have this new long setting up for next week. Entry is at 124.44. We talked about in our training room to end the week. We talked about moving that entry point up. 124.75 was that level that we were looking at. Just asking for more confirmation. We've seen a heck of a run. Netflix is up 20% here in the last week. Let's be cautious about chasing this move to the upside. So if this trade does trigger in, I will look at another call spread out in the December monthly options. That's kind of where my focus has been across the board. All right, let's talk about BABA. So we had our winning trade that was closed out Monday morning. We then followed it up with this short trade. We gave it another shot on the downside midweek. That trade did not work out. It stopped out. We took a loss on it. And we now have a new long setting up at 80.85. So that's the trade that I'll be looking at Monday morning. So it was unfortunate that we didn't get the market to pull back at all. It was just a very, very strong week market wide, and Alibaba kind of got caught up in that. So last week we booked a winner and we had a loser. So a very mixed week there on symbol BABA. Boeing, symbol BA. We've got this long trade that did make some really nice progress midweek. We finally got BA to wake up and give us some price action to work with. Our stop has been moved to break even, so heading into next week, our stop's at 147.91. The target's all the way up at 152.24. So I'm in another long call spread out in December, so you can see the trend here. I'm in a lot of vertical spreads right now. That's why I love trading options. They're so flexible. We don't have to be 100% aggressive all the time. We can cut back and take different types of trades to reflect the current market conditions. And I want to be cautious just in case we get this market to pull back quickly off of these overbought levels. So again, 152.24 is the target, 147.91 is the stop. Let's take a look at American Airlines. We did have this full winner that was booked midweek, right around Wednesday, mid-morning, early to mid-morning is when we hit that full target. So nice move to the downside. I mean, it wasn't the cleanest move. I mean, we triggered short, hit first target, came within a few pennies of hitting that full stop, and then we ended up hitting full target. So it was a nice trade there on American Airlines. Nice to follow up the loser with a full winner, so we were able to recover pretty quickly the losses from the losing long trade. So we're flat heading into next week on American Airlines. We'll take a look at a couple more and then we'll wrap up for the week. Citigroup, we'll take a look at the financials. Citigroup triggered into this long trade at 55.08. Again, I'm taking it very, very small with a call spread. I don't typically trade vertical spreads on Citigroup, but I wanted to take less risk. I wanted to be more conservative. So I took it with a call spread. Targets 56.45 and 56.95. The stop is down at 53.1. So we will track that one into next week. Goldman Sachs, the system, it's been doing its best to keep us out of the chop. I mean, we didn't have a single trade last week trigger in. We had you'll notice all these clusters of the blue dots, the pink dots. These were all trades that had set up last week, but none of them triggered in. The market was just bouncing back and forth. So the system identified the trades for us. None of the entry points were hit, so we canceled every single one of them. Now heading into next week, we have a short trade setting up at 189.17. So the nice part about the system, with the way it's built, we do have some filters built in to try to keep us out of the chop. We want to wait for price action to confirm, and that's another reason why I'm concerned with the market getting tired. If we take a look at Friday's session, these are the closing numbers from Friday. We talked about it, the market being strong. Look at Citigroup. Citigroup was down. Bank of America was down. Goldman Sachs was down. The financials were very weak on Friday. So in a strong market, it's going to be very difficult for that market to get follow through without financials participating. We've seen that time and time again. So the financials are also waving that red flag saying, hey, be cautious here. So that's something else that I'm looking at heading into next week. I'm just trying to take a look what other names that we need to cover. Let's go ahead and cover gold and then we'll wrap it up there. I want to keep this video around 20 minutes if possible. So gold, we've got this short trade in place. We have targets down at 101.54 and 100.43. The stop at 104.48. It's been choppy, and that's to be expected. I mean, look at this move to the downside. Gold and silver have just gotten demolished here the last couple of weeks. So we're oversold. So what I did here on this short trade, I took it, I took it more conservative. Took it with a smaller position size. A lot of people were looking at, a lot of my students were looking at long put spreads. I'm great with that. Okay, just to be more cautious. What we also did, because the volatility is actually elevated in GLD, we talked about also, instead of just buying a long put or long put spread, you could also have sold a call spread last week. Some people actually put on an additional position and sold some put spreads. Try to reduce some risk, try to get diversified, actually put on a trade just in case gold bounces over the next couple weeks, which I expect it to. So gold is actually one of those names, one of the few names with good volatility. There's a lot of things that we can do in gold right now. I personally have I have 3 different types of trades on right now. Okay, that's a great position to be in. There's a lot of things that we can do to mix up our trades. So I've got a couple of bearish trades on. I've got a bullish trade on. So I'm positioned well regardless of what the market throws our way here for the next couple of weeks. All right, so overall the market's very, very strong last week. However, towards the end of the week, we started to get those signals of a tired market. Started to get some dojis popping up on the daily charts. The volume a little bit low. Friday's a little misleading because it was options expiration, so volume on options expiration tends to be higher anyway. But we're starting to see. I'm not gonna call a top, but we're starting to see some factors that are typical of a topping pattern. So we'll see what happens next week. The financials also showing some warning signals like we just talked about. So if it weren't a holiday week next week, I would expect some decent selling pressure at some point. But I do expect kind of a choppy week. So if you are trading next week, just be cautious. Don't press it. Don't get super aggressive. Protect that capital, and we can hit it hard again once we get that Thanksgiving holiday out of the way. I think we've got a couple of weeks there as we head into the end of the year before Christmas where we can really make some nice progress. Right, so I'm going to wrap this video up here. We'll see what happens next week. I will come in. I'll probably have a quick short video on Wednesday. Again, I'm just not expecting much to watch closely next week. So enjoy your weekend, everybody, and I will talk to you here midweek next week.